All right, Charlie, thanks so much for joining us today to have a quick catch up on the property market in South Africa, with particular focus on KwaZulu-Natal and Umhlanga Arch development, which we're really passionate about. So Charles is the CEO of Devemco. You're one of the leading developers in the country and have been responsible for a lot of the growth that we've seen up the north coast of KwaZulu-Natal. So it's really, it's great for us to hear your voice, and a lot of guys out there are going to be tuned in to get some practical guidance and takeaways from the discussion today. So thanks for joining us. I thought maybe what I could ask you to start off with is, being a leader in the space, you've obviously been asked a lot of questions over this lockdown period in South Africa, and maybe you can just give us a bit of insight, like what are the most frequently asked questions that you've received, and how have you answered those guys, and what advice have you given people?
Okay, thanks, Mark. I think, questions that I typically get are, is it the right time to buy? Where should I be looking? What value properties should I be looking at buying? Is it residential, commercial, retail? Why shouldn't I send my money somewhere else, offshore, or should I invest in the markets, or why invest in property? So those are typically the questions I sort of get on a day-to-day basis. And I mean, just going through them systematically, I'm a strong believer in Maslow's hierarchy of needs, which is, number one is shelter, and effectively in our day and age property, and paramount is property in good locations. So for me, I've obviously done quite a few developments over the last 10 years, but I generally will choose a site or a location primary first, and then look at the product that site can yield as a secondary. It's such an important factor, not just location. I talk about macro and micro locations. So you can often have really good locations in macro good locations, and you can have significantly worse locations in really good locations. So for example, the Umhlanga Arch is probably the paramount micro location in probably the paramount macro location. And as a secondary example, if we look at something which is a really nice looking building like Park Square, it's also in Umhlanga, but locationally it's nowhere near the location of, say, the Arch, with the sea views and the vistas and the proximity to the beaches as well as the commercial hubs. So for me, I would always say, yes, property is an excellent investment, but it's all about location. It's such a high driver in our field. The other question is, why not invest in other markets? Why not, put some more money into a Bitcoin or into an offshore market fund, or a stock exchange, or a commodities-based market? And my answer to that is that those are great, and it's fine. It's everyone's got their own perception about investment, but one of the things property does allow you to do, which other investments don't, is it allows you to gear. You can't gear finances on a stock market. So, and by gearing, simplistically, it means that you can use the bulk of the bank's money for your investment, and you're obtaining the growth on the entire capital portion based on, so let's say a 3.5 million rand apartment, for example, at the Arch. You might put down a 350,000 rand deposit, but you're getting the capital growth of the full 3.5 million. And when you look at that, it's say an 8 or 10% return. That's 350,000 rand a year on a 350,000 rand deposit. So that's, it's 100% return, which is unheard of, generally and that's a long-term return. So,
Charlie,
I'm a big advocate.
Could I ask you on that? I think that's a fantastic little way that we can talk a little bit about the lending power. I know you're going to touch on that a little bit later, but maybe the guys drop the bank and the Reserve Bank dropping interest rates and significantly impact that methodology. Sure.
Yeah. So coupled with obviously the gearing from the banks, we've just seen two significant interest rate cuts, which is and I think obviously with the back end of this COVID virus, and hopefully the lockdown easing over the next couple of weeks, the banks are going to be forced to lend more aggressively. The money needs to be stimulated into the economy. The banks want to lend, but the banks want to lend into tangible assets of security. And typically the banks always see property in good locations. Once again, going back to the location, good locations are always seen as high security. And coupled with that, I wouldn't advise clients in this market to be buying 10, 12 million rand penthouses. I don't think that is the market. I think under the 5 million rand market is definitely the market. And it's obviously it's for rental as well as investment as well as residents. So I think those three factors: the banks are keen to lend, the interest rates on, I don't know when they were lower than what they are currently, potentially another drop actually going to come as well. The ability to gear, the ability to invest in a secure location and have the capital growth on as well as the rental income. So for me, in this market where everything is so volatile, including forex, including all the markets globally, key location property will always come out trumps, and that's why obviously I'm a big advocate in the Arch. Primarily because of, one, it's an iconic building, but two, it's in the most unique sought after location, probably on the KZN coastline.
Fantastic, but thank you so much, man. That's really useful and good practical advice. And I know we're going to drill down a little bit later into how we can plan for the future, because I think what's really important from this discussion is to get guys maybe some practical takeaways, maybe 2 or 3 things that they can go and do in terms of planning, who they could look to engage with, and what steps they could take to secure a future for themselves, maybe even at the Arch, if it's possible.
Yeah.
So what's maybe we could leave on. I think that's an amazing context to lead into the market as we see it now. Obviously the property market as a whole it differs from region to region and country to country. We've seen significant growth in KwaZulu-Natal over the last couple of years. Property's been growing at 21% year on year for the past couple of years. I think between Umhlanga and Ballito, which is not such a big stretch, but it's one of the fastest growing property regions in the country. A lot of investment going in there, a lot of young families moving out here. The lifestyle is amazing. I mean, I'm sitting out here in my garden on a wonderful day, and the temperature and the climate's amazing. So there's a lot of good things going for KwaZulu-Natal. But how are you seeing the market right now, and what kind of advice could you give to guys for extracting value, or are we going to lead into planning? So how do you see the market at the moment?
Look, I think the market's it's going to be a tough 3 to 6 months. However, obviously the banks have assisted by stimulating those rate cuts. I think guys that have got a bit of spare cash, everyone's going to be a bit reluctant to actually release cash. However, I do believe that there's going to be opportunity at the moment to get in and to secure some really good deals. I think a lot of investors, or let's call it educated and maybe long-term investors, know that you look past a 6-month window. You're looking 2 to 5 years. So just drawing a comparison to the sort of the eastern seaboard in Cape Town, where the guys are sort of paying 150 to 200,000 rand a square meter. We have got premium space on beautiful shorelines in a sea that you can actually use with all the facilities, less traffic, amazing proximity to an airport, and we're looking at 40,000 a square. So the market in Durban's got legs. In a short, it's got the ability to double in the next 5 years comfortably and still be significantly under some other rivals in other areas with sea views, etc. So for me, I think we're going to see a big pull from guys that have bought at 100, 120,000 a square in Cape Town. I think we're going to see some semigration from Joburg and from Cape Town. I think Durban is seriously poised to boom, especially with the ports, as well as the Metropolis expanding. Canubia is one of the largest developments in the country at the moment. We've got Gateway, the hospitals, the facilities. And then I think, coupled with that, guys want security, and security no longer means just actual physical security. With this virus, what we've seen is the ability to control precincts and buildings doesn't just mean security as we know it, it also means health security. And I think that's the asset and the value that buying into really well-planned, well-managed, well-developed, secure estates, whether they be, freestanding or apartments. I think that we're going to see continued growth, and I think you're going to see continued decrease in freestanding homes, and I think a lot of the market will start moving across. And then I think another thing which we are just in Durban just starting to get our heads around is the convenience lifestyle. Everyone is gearing more and more towards convenience. If you think 3 years ago, you'd wait 3 minutes for your email to buffer. Now, if you wait 3 seconds, you get frustrated. So I think the ability to actually be able to eat, stay, work, play, have friends staying at a hotel, go down to a showroom, walk down to the beach, all those convenience facilities is what intrinsically adds value to property. And that's something that I believe that the market, although it's tight at the moment, I think the educated part of the market will get in and will secure those opportunities.
Yes, that's fantastic insight, Charlie. Thank you so much, man. Not a lot that I can add there other than saying that, just listening to you talk and what's really important to an investor and to somebody that's living in a development is that convenience and that lifestyle and ensuring that your health is paramount, and that's one thing that we really excited at Mhlanga Arch about, in the sense that, we've got a really big open high street. It's cobbled streets. It's really outside living. Beautiful park with a wonderful big TV screen that's coming in. So we're going to host a whole lot of events there. We've got loft apartments for the bachelors, or for the newlyweds, or for the young entrepreneurs or guys working in the city. We've got 2-3 bedroom apartments in the tower, and obviously a wonderful Hilton hotel, which I'd love you to touch on in a second as well. And great eating, great drinking, great celebratory areas. So it's really a place that you don't have to move around too much in. And like you said, the proximity to the ocean is just amazing. But really interesting to understand your view on the market there. And it's really encouraging and exciting for the future of KwaZulu-Natal. So the one thing, can you just elaborate maybe a little bit more? And this might be good for us to lead into a bit of planning. You said that any investors and long-term investors take about a 6-month view. And, in this development, we're in the final stages of construction, hampered by the lockdown, just stopping us getting over the line in time, but probably a good thing. So maybe the perfect time for somebody to plan and to have a look at a few options, and maybe what stock is left over there, both from an office perspective and from a loft or residential apartment point of view. Because, within a couple of months, when the construction is complete and handover starts taking place, and then we're going to really start to see the market turning, we hope. And what's your guidance and advice on that, if you could expand a bit?
Well, I think we've all heard that term, never waste a good crisis. And I think it's something that I think we're going to see, typically as a developer, you look to about a 5% drop off on transfer, i.e. 5% of your buyers dropping off. Circumstances change. I think that probably will be a little bit higher, which means that there's an opportunity for guys to get in and buy a product that was launched 3 years ago. So no transfer fees, getting in at a really good price. If you missed it 3 years ago, there's an opportunity to come in now and pick up that stock. So for me as an investor, if I was an independent and I was, not part of this scheme, I would certainly be looking towards, securing a bit of cash, because when the good deals come with developments as the one behind me, I would want to get in. And I know that, over time, it's going to be something that will yield year on year on year, and it's going to continue to grow. So the planning factor for me is, if you've got cash and it's spare, get it ready, because good deals will come, and that's when guys typically make money.
Great, thanks, Charlie. And so maybe let's look at some 3 practical takeaways for guys, like kind of 3 steps. You've said number 1 there, if you've got cash, you've got to get that ready. You've spoken about the growth that your capital could have if invested in a solid asset like Mhlanga Arch as an example. What about the people that maybe don't have cash, before we go any further? Like if you don't have spare cash lying around, but you've got assets and you're able to get some funding from the bank and some finance from the bank, really good time to and approach and gear a property investment.
Yeah, so I think it's always easier for guys with cash, but for the buyer that is trying to get onto the ladder, it's always hard. The first acquisition is always the hardest, because you're in uncharted territory. But as an example, the little lofts, the loft units at the Mhlanga Arch are so well priced, And I don't believe that in the next 3-4 years, you'll see something of that quality being introduced into the market again. So if there is an ability, to borrow from your folks or just to get on that step, because, I did a little analysis on, let's call it a 2 million rand property. If that's increasing at 10% a year, that's gaining 200,000 rand a year. You're not going to be able to save that by squirreling money into a piggy bank. You're actually getting left behind every single month that you defer that decision. So for me, the young, or first-time buyer, it is so paramount that you take the plunge, and particularly now with the interest rates as they are, it's more affordable than it's been in my lifetime to buy property. The banks, as I say, are going to be aggressively lending into good assets, and I think it's a perfect opportunity for a young buyer or a first-time buyer to get in. That's the second part. The third part is the investor guy, the guy that has got the cash. We said it's easy, but sometimes actually being a custodian of larger portfolios is very difficult, and a lot of guys are, in my example, I've acquired some office space at the Arch, primarily because I know in 10 years' time it's going to be the most premium. It's most premium now, but it will still be the most premium space. And you're going to find your corporates, your big office guys, after this, COVID lockdown where we're all Skyping and team viewing, they're going to fraction. They're going to start going into more segmented office spaces. They're going to start wanting more co-work spaces. So the investor, for me, actually that can look to smaller office spaces and more multi-tenant spaces. And I think that's going to be the way forward, and a really good opportunity for the more savvy investor and with a bit more, capital. So, when we refer to gearing, gearing is the ability to use the bank finance. So, for instance, let's just use a 3 million rand property example again. Typically, the banks will lend you 90%. What happens is during the construction process, which on the Arch is probably in the region of 3 years, you put your 10% down into an account. It's getting its interest on it, which just belongs to the buyer. However, during those 3 years, you're not servicing a bond. You're not actually doing anything other than actually leaving your money in the attorney's account. You're getting the 10% growth on that 3 million rand whilst the project's getting built. So by the time you actually take ownership, typically you've made about 900,000 on your 3 million rand asset. You've made 900,000 on the 300,000 you put in. So you've got a 300% return on day one. You then take the assets, you now start servicing a bond, and you might have a tenant which is, let's call it 10 grand a month short of servicing your bond. So yes, you're chipping in 10 grand a month, but the property is still growing at 10%, not on the 3 million. It's now 10% on the 3.9 million because it's worth 3.9. So you're now making 400,000 a year and you're chipping in 120. And that's the strength of gearing. So, if you look forward 5 years, the property is probably going to be in the region of about 5.5 million, net value, and you've put down 300,000. So effectively, you've made 2.5 million on 300,000 in 5 years. And you're just not going to get that anywhere else. And once again, gearing works when you choose the right asset in the right location. So, that's the strength of gearing in property.